Well, it's been a major financial crunch in cattle country the past 2 years. Feed yard margins cut as deep as $500 per head last year. While the situation has improved some, analysts say looking longer term, we're not seeing greener pastures just yet. And that's this week's Farm Journal report.
It's been tough as hell.
Bob Foote has been in the cattle feeding business most of his life. The volatility is nothing new to Foote, but 2016 has been one of his most challenging years yet.
3 years ago was probably the best year we ever had. And then we went down since then.
The price peak may be in the rearview mirror as the wet blanket today is an oversupply of protein.
The story is pretty well known. There's just too much meat out there.
Following the 4 to 5% increase in beef production this year, we're still going to be looking at another 2.5%, 3% increase in beef production in 2017.
It's cattle feeders like Foote tightening their belts to survive another year.
Anything that you can do to minimize loss. Feed, our big cost is feeder cattle. The next thing would be feed. The next thing is you hope you get a up market here every now and then to help you.
Now that we're entering the final days of 2016, things are looking up.
I actually think that cattle feeders are placing cattle today that have a substantially improved profit opportunity in 2017 over what's transpired in 2016.
Close says the number of feeder cattle imports from both Canada and Mexico declined this year, which is helping offset the increase in domestic production. The weekly Sterling Profit Tracker has been mostly red this year, but the latest report for the week of November 25th showing green with $52 per head gains. That's quite the reversal from the $51 per head losses feed yards saw last month and the startling $486 a head losses that cut so deep 1 year ago. It's record carcass weights that pushed feeder prices so far down in 2015. Close says while average carcass weights are below year-ago levels, it's still well above the 5-year average.
One thing that producers could do to help reduce that escalation in beef tonnage, simply start selling cattle at lighter weights, try to move these cattle out a little ahead of time, and provide less tonnage on the market.
Beyond supply, cattle producers know they need more demand, and thankfully, 'tis the season for people to buy meat.
We're starting to see some real buyer interest in middle meats going into the holiday usage season.
That's why analysts like Close and Brugler think short-term, we've found a floor after being heavily oversold.
That's not to say that we're still not going to see some volatility and swings in prices in 2017, but we do think we're working from a price level that will provide more stability and a better marketing environment than what we've seen this year.
While the bottom may be in for now, long-term, the picture is much more bleak.
I think long-term, the cattle cycle says we're still expanding cattle numbers. You'll probably sometime by 2018 go down to 80 bucks. And that, I think the cattlemen need to understand that. If the cycle continues, there's more to come.
Brugler says that's largely dependent on pork and poultry. If those sectors cut back production, cattle may not dip that low, but it's a startling projection for which producers need to prepare.
You've got to look hard at your operation. Should you be expanding or should you be cutting back? Secondly, particularly on the cow-calf side of things.
Close is hopeful the large price gap between live cattle prices and retail beef prices this year will tighten.
One thing that it would help more than anything is if we would finally start to see an easing of these sticky retail beef prices. The lower prices will encourage more consumer spending, more purchases of beef. That would be a huge benefit in getting this tonnage cleared in the market.
While the outlook for 2017 is better, Foote is taking it in stride, hopeful the worst is behind him.
It's not going to be no 2014 when we had a windbanger. I mean, we're all outstanding profits, but we're going to be all right.
And with 3 sons invested in the family feed yard business, he has simple advice for young producers still trying to push through.
Hang on, it'll get better.
Now, analysts say red meat exports have been fairly strong in 2016, but we need that momentum to carry throughout the next year in order to help prices over the next 12 months. Well, when we come back, John Phipps thought this week's customer support should be addressed by me. So it's a message from a mom next.